Welcome to Trading Nation. I'm Eric Chummy. Today we're joined by famed bear David Tice. He's known for running the Prudent Bear Fund, which he sold to Federated in 2008. David, thanks for joining us here on Trading Nation.
Glad to be with you, Eric.
So let's get right into it. We've seen what's happened in the markets the last few weeks. A lot more volatility than we saw in 2017. The Bears would not have had a good year last year, and I know you were not as bearish last year, but it feels like maybe now's the time to jump back into that trade, right?
I really believe so, and really it's a conundrum, Eric. I mean, I was on a couple times Trading Nation. I was bullish on both times, but, I thought about it a lot. Are we going to get back to the a increase in the market like we've seen, or are we going to decline? I feel like the weight of the evidence is that we've broken the tectonic plate. We now have a bond bear market that looks like it began in September. We now have the dollar in a massive decline. We've had our first 11% decline in a rally. I think the risk is just a lot higher now.
So it's interesting because I want to ask you a couple of questions that we'll get into. Number one, what happened a few weeks ago, a couple weeks ago, when all of a sudden it just changes, right? All of a sudden you're in the middle of a day, you wake up, everything seems normal, and then things turn around, and then boom, the next couple of days, all this vol comes. Why that day? What happens on that day when everything else seemed fine the day before? And now we can talk about this right now and point to all these risk factors that everyone else seemed to be ignoring just a couple weeks ago.
Well, we know that markets can act irrationally, and everybody's looking for an answer about what moved the market that particular day. And there's talk about how potentially an increase in wage rate inflation levels. However, I really think it was more due to the fact that people are waking up to the fact that Congress has no real discipline at all. What happened with eliminating the spending caps and people looking at what tax rate changes were going to do to the deficit. Essentially, we had the Budget Control Act in 2011 that was really provided a reasonable amount of discipline. It ended up cutting the deficit from $1.4 trillion to $440 billion. And essentially, those spending caps were in place for a while, and essentially they were wiped away by Congress in order to get through the budget ceiling. And essentially what that's done is now people are talking about a budget deficit in the $1.2 trillion range for fiscal year 19. People are talking about $2 trillion for 2027. Essentially, at the same time, we have this massive budget deficit, all these bonds that are going to have to be financed. We have the Federal Reserve that's encountering quantitative tightening, and therefore that's happening at the same time. And we've never seen anything like that. And therefore, bonds are, the 10-year is approaching 3%. Looks like it could get through that tomorrow. There's some big issues with the bond market.
It seems like, exactly, that's what I wanted to go to next. It seems like a lot of this might really impact the bond market more than the stock market. Would you agree about that?
Yes, that's right, because essentially this boom that we've had in financial assets has been central bank largesse driven. It has been, we've had a 30-year bond market, bull market, and therefore if that ends, that's not good. There's no way that we can afford, higher interest rates with this massive budget deficit. We have 40% of the Russell 2000 that ends up paying interest based on LIBOR. Higher interest rates are going to create a problem, and just the rates at which stock prices are discounted. And essentially we're at the fourth highest level that there's been on a Case-Shiller adjusted, cyclically adjusted PE over the last 147 years. So markets are very, very high.
So then where would you position yourself here? If all of a sudden stocks don't look good, bonds look worse, obviously you don't want to buy the dollar, what would you do here?
I tell you what, right now one should be concerned about protecting principal. It's more a return on principal than a return of principal. I think cash, as anemic as those interest rates are, is a good place to be. I do believe that gold and gold stocks represents a phenomenal asset choice. We've had Gold prices were down 4 years until the last two. Gold prices have been up the last two. So if you look from a technical analysis standpoint, we had a nice big decline. We've had that first rally. In gold stocks, we've had a massive decline, a rally, and then another decline. We think a lot of money is going to be made in gold stocks. The GDX has averaged 25% a year for the last 2 years. We feel like Bitcoin has actually gotten some traction, obviously up fivefold from when I mentioned it back in July last year, that there's likely to be a increase in gold. I think that there's going to be a number of ICOs that are going to be backed by gold coming up, and I think there's going to be some attention to the fact that we have fiat money, which is one reason that finite supply for the blockchain-oriented vehicles has been attractive, is going to seek out gold.
David, talk about that. You said gold-backed ICOs, and all of a sudden it felt like gold and Bitcoin or gold and cryptocurrencies were two different things, and now you're saying they're going to be connected somehow. Can you get into that a little bit?
Yes, well, there's a number of companies that are looking at, and in fact have, embraced a gold backing for a blockchain vehicle. We know the Perth Mint has done something there. Sprott has done something there. There are a number of other companies that are doing that. One of the issues that a lot of old-timers have had with Bitcoin and blockchain is it's not backed by anything other than the energy to provide the calculative mathematics in order to create, the blockchain and to test the blockchain. However, what you have is a limitation to the supply, which is something that we don't have with fiat money.
Do you have any in your portfolio? Do you have any crypto in your portfolio?
A little bit, not nearly as much as I wish I had, but I've been a believer for a while.
Okay.
And believe that gold is going to have a stage 2 rally, I think, due to some of these symptoms and factors about the fiat money.
Okay, David, really enlightening conversation. I appreciate you coming on here and joining us today.
Always good to be with you.
All right, so that was David Tice. My thanks to him for coming on Trading Nation. Thank you for watching. I'm Eric Chemi. We'll see you next time.